Hi there, it's John Thompson. There's been a lot kind of going on lately with interest rates and a lot of stuff in the media, and I continue to think that they're reporting the wrong stuff as we keep getting calls from our clients and prospects, talking about how the assumption of interest rates falling dramatically is because of the Fed meeting and elections and so forth. So I wanted to have just a quick overview so you can understand what the rates are actually moving up in the opposite direction and understand what's really happening in the marketplace. So let me go ahead and get this chart up here in front of us. Oh, put it down. All right, so here on the right-hand side, this is essentially what are called Japanese candlesticks, and these represent trading every day in mortgage-backed securities, which actually are the only thing that control interest rates. The green, to make it very simple, the green ones are good days, the red ones are bad days. As this goes upward here in this upward direction, that means mortgage pricing is getting better, and as it's going down, it's getting worse. And so this chart you'll see is all the way back to August, so through the end of summer, September, you'll see the rates were getting worse here, up until middle September. Then they started kind of getting better a little bit towards the end of September. As we started to head into October, if you could have correctly guessed the peak of the market, it would have been here on October 7th. And then things are getting worse from there, kind of drifting sideways here a little bit, then kind of getting better, then improved a little bit as there was news about the Fed meeting. Then the Fed meeting was last week, and literally last week, right here was the Fed meeting. And you'll see what's happened since then. The market's gotten gradually worse, and this is for a couple of different reasons. Let me go ahead and see if I can, slide this over here for us to look at. And so the purpose for the quantitative easing was for three different reasons. The Fed had three stated reasons for doing things. One was to support economic expansion versus flooding the market with liquidity, $600 billion worth of liquidity, so a lot of money coming in the marketplace. So essentially what they do, they buy bonds. And they come in the marketplace, they buy bonds, and when there's a big buyer in the marketplace, what tends to happen is the prices actually kind of go down a little bit. Their second objective was to spur inflation. Okay, so they want inflation. There have been risks of deflation, and in reality, in order for our market to recover, for there to be jobs out there, there needs to be inflation in order for there to be increased pricing power for our consumer-driven society, culture that we have here in the United States. So we need some inflation. So all this money has to be absorbed somewhere, and it's likely to create inflation in the long run, although it may not be immediate. And then the third mandate was to really try and support the stock market so that we didn't have a drop-off in the stock market. So all these things are starting to happen, and in reality they're all a drag on the bond market, and the bond market again sets mortgage pricing. So none of this is helping mortgage pricing. In addition to that, what the Fed is doing is buying in the middle of the trading range. They're not buying 30-year mortgages, they're buying 5- and 7-year notes, and so there's really nothing happening on the mortgage side. Bottom line is, again, going back to this, is to see mortgage pricing has gotten worse. If you're considering doing anything in the mortgage world, my strong suspicion is we may have seen the bottom of the marketplace either back here or back here. I certainly could be wrong. We may see some recovery from these levels here, but I do believe that the end is very near in terms of these low rates. Although I don't certainly think they're going to go up a lot as we head into the next year, but I don't think we're going to continue to see these low fours that we have been seeing for several months here. All right, thanks. We'll talk to you soon.